Right. So recording is in session. Please, except when I'm asking questions, that's when we should unmute. So I think we should start the class now. So thank you very much for coming. And of course, I cherish your input. If you have insights that you want to share, please feel free to share it. So let's get to the class. So this is Ohanda. I don't like using Ohanda. I prefer to use Forex.com for my analysis. But my Forex.com is full of marks. Let me just delete them. I just delete everything. Reset chart view. What's that? Okay. So for the sake of our sanity, let's just use Forex.com. Forex.com it looks much more accurate, less manipulative. So that's why I'm using Forex.com. And like we always do, we take our analysis using the top down. We take our analysis from the top down. Okay. So for the year, gold is still bullish. Remember that we work on gold. So gold is still bullish for the year. And on the 6 months time frame, it's also still bullish. On the three months time frame, quarterly time frame, okay, it's bullish also, of course, because this is still January, right? Although this one we have here, the last quarter, there was a lot of consolidation in the last quarter. That was why there were a lot of stop loss hits last quarter. Okay, so as it stands now, it looks like it's still looking like probably it's going to keep going up like this quarter, but it's still early to tell, right? So we can't rely completely on what is happening on the current 3 months time frame because it's still January, right? And so we can't rely on the 3 months time frame, and we can't rely either on the monthly time frame, but we can work with the weekly time frame for now. So the weekly time frame, it seems to me like the safest place to start taking analysis from most of the time. Especially if you're a day trader or a swing trader, it's very okay to start taking analysis from the weekly time frame. And what we have here is that you may not see it clearly here, but there is already some resistance levels being touched on the weekly time frame. Okay, you see it clearer on the daily time frame. So this is the daily time frame. Let's expand this. And on the daily time frame, I want to bring out my horizontal ray, and I'll mark this. So this is the magic that is happening. So we have a support level here. We have a support level at this point on the daily time frame because there was a bounce back from this region. So there was a bounce back from this region. I'm trying to find. Don't know like I know what he has done for me. Okay, so there was a. I was looking for the circle. There was a bounce back from this region hop. This was a support in this case, but later the support got broken down. It got broken, and the support became a resistance level that we can see here. Let me remove this. So this became a resistance level, and that was what happened on Thursday and Friday of last week. Okay, so you can see that this is a strong resistance zone, and this is getting it. And who knows if what is happening here, if it's going to if this is going to work out with what we're expecting on the 3 months time frame. Of course, the 3 months time frame is not showing support or resistance, but this candle you see here, it's a reversal. It's an indicator for a reversal, right? It's an indicator for a reversal. But how do we know that it's completely an indicator for a reversal? It is until we see this particular candle or the next candle. That's the next 3 months after this first 3 months is completed. This current 3 months is completed. The next 3 months candle, if you can see either this or the next candle fall down, that's when we can categorically state that gold is going to sell for the long term. That's for the next 3 to 6 months. Okay, but what we have seen here on the daily time frame and also on the weekly, it's a preliminary for it. Right? Why? Because of chart patterns. Chart patterns, we have triple tops, triple bottoms, and the likes of them. So what we already have here is more or less a triple top, right? This. So I won't be surprised if gold starts falling drastically, and then all the anticipated places we expected it to fall to, which is this region, this 24,800 region, and 2500 region, 2400 region, it might get there. Or it could be that probably it's going to bounce on our 50 EMA, or it might not even get it might be and then eventually rally to break through this resistance level once again and beat the highest the all-time high. The all-time high currently is 2790. So it could actually, there are two ways. So forex is a game of probability. That's why some people call it gambling. I don't think it's gambling, but everybody is entitled to their opinion. So forex could actually start coming down after forming triple top, yeah, or it could just come down temporarily and then beat this high. We've seen it happen time and again, so we can't say for sure. So what I just want to point out here is that on the daily time frame and weekly time frame, we already have a triple top here, and a resistance is already happening. Actually, let me bring this down a bit to let me bring it to 4 hour first. Not like 4 hour is anything special, but I think it's showing some special things anyway. So on our 4 hour time frame, you can see this this rejection candle, right? This rejection candle, this is a reversal candle. Sorry, there are times I miss this rejection, reversal, whichever one. So this is a reversal candle on the 4 hour. Okay, but for me, my fulcrum, my center of gravity for trading is my 1 hour time frame. 4 hour is very important, but my 1 hour time frame, this is how I knew that gold was going to sell. First thing last week. Number one, I'm talking about last week last week Thursday. Because I knew it was going to sell. The first thing was that it already entered when immediately the market entered into this high. reach this high, I knew that it was going to reject. Even if it will eventually break through it, there is no way. It has to respect this zone, this resistance zone. It will respect it. It might fall temporarily or fall permanently, whichever one, it doesn't matter. But it is going to have to respect this zone for now, right? It's going to respect the zone, and that's what it did. Okay. Then on 1 hour, how do I know that a trend in a change in trend is happening? How do you know? There's a way I know a change in trend is going to happen, and I'm going to show you today. So what we are doing currently is we are doing market review, and market preview together, right? So there is a very simple indicator that I use, not indicator per se, but a candlestick. The way the candlestick forms, that I know that, okay, this guy is going to fall on the 1 hour. It is this simple thing that you can see here. This bearish, right? These, let me mark it. This guy here, that's how I know that this is going to fall. And I'm going to show you why. Okay? Whenever you see that your market, the market has taken a bounce, especially on the 1 hour, it has taken a bounce off a major exponential moving average. That's, in this case, the 50 EMA or the 200 EMA. The 200 EMA is a stronger determinant than the 50 EMA. But the 50 EMA is, that's the only one that is installed. That's the only EMA that is installed. This blue wavy line. Whenever you see a breakout from it, you know that, okay, if it keeps going, and it is not close, if the candlestick reversal, if the candlestick, or let me say a bearish engulfing candle to your EMA, your 50 EMA or your 200 EMA, if you see a candlestick reversal, just know that, okay, if you are buying before, just close that trade. Especially when it has hit the threshold, when it has hit the resistance level. Remember, this was the line we marked for our daily, right? So there are two things that confirms in this case now. This is a major resistance zone. That's the first one. On the higher time frame, that's the daily, weekly. You can see that this is a daily, this is a major resistance zone. I want to be sure that you guys are following me. Are we together?
Yes, we're together.
All right, thank you. So this is the first indicator that you are going to experience a trend reset, a trend reversal, right? Or a change in the trend. The first is this major resistance level, the first one. Then the second is when you come to your 1 hour and you see that, okay, the resistance level, the major resistance level has been hit, and you have a bearish engulfing candle when the market was on the buy setup. When the market was buying, it was on a buy trend before. And then you see this major resistance level, just know that, okay, there's no two way about it. The market is going to start falling. Now, for how long it falls is will be determined by of course, you may not be able to determine it by yourself, but it will be determined by the market where it's going to fall to. But definitely, the market will not stop falling until it hits a major liquidity place, a major liquidity point. You know, it reversed around a major liquidity point. Is that reversing around the major liquidity points? This candle is what we are talking about on the 1 hour. This bearish engulfing candle, this one, right? You see a candlestick that falls, and then it swallows up all the gains of this last 4 candles actually in this case. It swallows up. I just know that it was going to sell. Actually, this happened on Thursday night it was around past 9 or to 10 Nigerian time. I entered sell at 26.16 when this candle closed, and I put my stop loss here. But I don't know what happened to me. I left it, and I was expecting to have seen major falls. But when I saw this candle, I woke up in the middle of the night and I saw this candle and I closed my trade. for me. I closed this trade. I shouldn't have closed it actually, but I closed this trade here when I saw that it was not going according to plan, and then eventually it started falling actually. Okay, that aside, but yeah, this is just my decision here is not the correct decision because I became emotional. I started trading emotionally. I made an emotional decision here, right? Noticed. What they talk about market manipulation is very real. But if you know what you are doing, if you know how to trade, if you know how to detect market trend reversals, the next strength you need to develop is how to stick to your decision. How to stick to your decision. Yes, even though it might look like, oh, the way the market is moving, it might look like, oh, maybe you've made a wrong step. When I saw this candle, this is a doji candle. It signifies a reversal. Actually, when it is happening, sorry. Actually, when it is happening on the 1 hour time frame, I'm trying to make this why. This candle was what I saw. So I saw this. In fact, I just woke up. It was around past 3 a.m. that day on Friday. And I saw this. I fell back from here and I closed it at break even. And I slept back. And when I woke up, I saw that it was already reversing. But I wanted to be sure. I could have entered back and replaced my stop loss at this stop. I wanted to confirm. So, like, if you make a decision, the first decision you make is right, you must have the balls to hold on to your decision, no matter what you see. Because see, the market is like the war between the devil and God. It's like the war between the angels of God and the angels of the devil. When a good decision has been made, the enemy will come and sow doubt into your heart that, oh, you feel like maybe this is not going to work. Especially with the funny candlestick patterns you will be seeing. All right, look at this. Anybody that sees this, we all know that this. If you are a student of forex markets, if you have studied candlestick patterns, you know that, oh, seeing this is this is an indication that this guy. But it was a farce. It was just nothing. It was nothing. It was just a decoy to just kick those who are selling out. Right? And see what eventually happened. There was this break, bam. I think the first trade we entered at, I can't remember where we entered now. But we entered somewhere around 27.10 or 27.14, I can't remember. Right? And then there was another manipulation. When I entered this trade at 27.16 on Thursday evening, and I went to sleep, my TP was 27.02. And that was already 140 pips. So if I had been patient, if I had not made that mistake, I would just have, easily made my 140 pips here. But I chickened out. Okay, that was why I think we only hit one break even last week Friday. We were not quick enough to take advantage of this trade, actually. Although I took it personally, I entered quite late in my own account. But I think we set our sell limit at 27.19, which was quite naive of me also. I made some terrible decisions on Friday, so apologies to you guys, actually. But by God's grace, those decisions will not happen. Those wrong decisions. Okay? So this setup we have currently is that gold is going to sell at least for the next 1 or 2 days. When the market opens this night, I expect it to, of course, with what is happening now, I expect it to reverse a bit up, maybe to like 27.10 or 27.08. Worst comes to worst, it should now come back to 27.14 or 27.17, which I don't know if it's going to happen like that. But with what is happening here, I'm going to show you on the MetaTrader also. It seems like gold is going to reverse a little bit before it starts dropping. And I will show you using the EMA what I'm talking about. Okay, so remember what we're saying. First of all, excuse me. So first of is what is happening here, right? A reversal on our larger time frame. So our weekly time frame is not showing any candlestick pattern yet here to certify that, but the daily time frame it's showing a form of promising acts that gold is going to fall. Okay, it's still early to tell, in short. Okay, the 4-hour time frame is showing a promise of a fall also. Excuse me. And actually, what the 4-hour is doing now, which this reversal pattern I'm seeing on the 4-hour, I will expect gold to maximally sell to buy up at most 27.12. So I think I will put our sell limit at 27.08 to 27.09 region. Okay, immediately the market opens, I'm going to send the signal out after this class. Okay, so I will expect, okay, with what is happening here, at the low of this particular candle, this is 27.09.95. Let's just say 27.09. Okay, it might not, let's say it might not get there, so we put at 27.08 and put our stop loss at 27.18. so that's 100 pips risk. And our TP, we're going to find where our TP is going to be. I'm going to find where our TP is going to be on MetaTrader, although I'm thinking it should be somewhere around 27.88, which is the closest liquidity point. Let me mark it. So we have 27.88, 89, 27.88, 89. Let me. What color should I use for this? Let's use red. Let's use blue for this one. Let's use blue, and for this one red. Okay, so it is selling from here. Our TP is here. So our TP is expected to be at this point because it's a strong liquidity region and it's the closest liquidity region. So if it should tag us from 27.08 to 27.89, that's almost 20 pips. Almost 20 pips actually. almost 200 pips profit. So that's like 1:2, make 200 pips. And the beautiful thing is that it's very unlikely that it will get to 27.18 again. Okay, it's very unlikely with this reversal candle I've seen here, with this reversal candle I've seen here on the 4-hour. So it's very unlikely. Okay, so this is how I take trades sometimes. So I will expect it to get somewhere here. Okay, 27.08 thereabouts, and then it should come and eat our TP here. Okay. Okay, so let me transfer this analysis. So I've just done this analysis on the trading view. I want to use my EMA to properly understand what is happening. So far, I don't know if I've made any sense to you guys. Am I making sense? Please, I'd like you to. I want everybody to talk, please. So please, you have the floor for the next 3 minutes. What do you think? Any questions? Is it making sense? I'm not following you. Guys, talk. Oh. Any questions? Hello.
You're making sense.
No questions from me. For now, I'm still following. Thank you.
So I'm going to take that what I'm talking about. Is that correct?
Sorry?
Everybody gets what I'm talking about. You are flowing with me. Is that what you guys are saying?
Yes.
Yes.
Okay. All right. So let's continue then. All right. So I'm sharing my MetaTrader 5, yeah? And the reason I'm sharing my MetaTrader 5 is just the same trade as what is seen on the trading view, but MetaTrader allows us to set different what do we call it, moving averages all at once. You can set a lot of indicators on your charts. So that's why I'm using MetaTrader 5. So this is what I was talking about. This was Thursday evening, like I said. When you see a bearish engulfing candle on a buy trend, and you can see that it is far away from there is a distance of it to your 50 EMA and your 200 EMA, the closest one anyway. If it's a long distance from it, just know that this is an indication of a sell rather. And I will show you from different perspective. Now look at this. This also happened, right? This was last week Friday to Monday. Now there was a retest into the 50 EMA on the 1 hour time frame. Then when the market hits a major resistance zone, this resistance zone was 26.98, right? So the first thing it hit the major resistance zone. Of course, it's going to form a reversal pattern first before lining, and see what happened. We first got this reversal pattern, and then this big bearish engulfing candle. You can see that it is not close to your 50 EMA. So this is a confirmed indication that it was going to sell. Of course, there are some people that will enter sell here immediately, but whenever you see this, just wait a little bit, because it is most likely going to try to cover the imbalance that is here, right? So you can just put your sorry, what's that? You can put your imbalance. Sorry, what am I saying? You can put your sell limits here, because it will come the space is left when it's after this engulfing candle. Number one, this was a rejection pattern, and then this bearish engulfing candle comes down, which signifies a sell. Of course, it will first go back a little bit just to cover the little imbalance it has here. There are times it doesn't go back, but most of the time it goes back. If you enter your sell here, that means, of course, you have to put your stop loss here. Or if you wait for it and you allow it to cover the imbalance, which is what we have here. If it goes to the imbalance, enters into it, if you place your sell limit somewhere here, you put your stop loss here. So your sell limit will be at 2692, and your stop loss will be at the higher is 2698. Okay, that's 60 pips compared to if you enter sell from after this. That's you entered at 2685. That's the 2687. That's the close of this candle. 2687. And you're at 2696 and 98 rather. That's about 110 pips compared to 60 pips. So you can see the difference. So you have to know how to do your calculation. I don't know what you guys call it. Is it the fair imbalance? I think it's imbalance that we call it, not the fair value gap. So you will see things like this often. Okay, let me show you another example, of a buy trend. Now, this is where it fails. This is where, now, please, I want you guys, so that you will not be entering trade blindly. I said that if you see that reversal happen, and it is not, if you see this, the candlestick rejection, the bearish engulfing candle, if you see it happen and it is not close to your 50 EMA or your 200 EMA, that's when I said the sell is valid. I believe you guys understand what I'm saying. But if you're already, okay, if you're already on a buy trend like what we have here now, if you are seeing these rejection patterns, it's most likely because there is a minor resistance level or major resistance level at the top, at the places where it is rejecting. So when it hits, when a resistance level is hit, the market will retrace a bit and is a gather momentum to break through it. So with this one, it broke through it, gathers momentum to break through the next one, right? That's why we have the higher highs, higher lows, higher highs, higher lows, right? I don't like, or let me say I'm not used to, it's not like I don't like, I'm not used to drawing those higher highs, higher lows that people used to draw, those marks. Okay, so now look at this. This was a bearish engulfing candle, but the aim was to hit the 50 EMA and reset. It's not like there's a reversal that is forming. Okay, because most of the time, right, you have to let me say this, you have to know the position you are in the market. Know which position are you on the market, right? Know the trend. I want you to write these things down. Know where you are in the market, and by where you are in the market, it means you should know which trend is happening currently in the market. You must know. So you know the trend. That's the first thing. You must know the trend. The second, what's this? Okay. The second thing is that you must know your liquidity points. Before we started this class, you saw the lines that I erased off from my liquidity points that I have marked down, to know, okay, the places where the market is likely to reject from or to continue from, right? So it is important for you to know those things. Your trend, you must know your trend as a forex trader. You don't just go into the market without knowing where the trend you are, because how do you even want to place a trade and with the hope of winning? Don't gamble. Okay, so you know the trend. You must know the liquidity points, not liquidity points, different liquidity points where the market can touch and reverse. Where you can that means where you can put your take profit and your stop losses. You must know those points in the market. Very, very important. Okay, and that's the beauty. And that is the beauty of oh sure. Sorry, let me reply this person. That's the beauty of that's the beauty of our that's the beauty of the EMA. Sorry, someone is trying to enter into this video. He doesn't know how to get into it. Okay. Sorry about that. So we had this bearish engulfing candle, right? But it sunk into. You can say number one with this distance. You know that this is not a good place to even enter. When you see this kind of candle, bam. Because when the market was reversing, the market rejected from 26.49 and it sunk into 26.21, like You can see here. And then I think I asked you guys to enter as 26 for those who had joined us then. So this was a very, very sorry entry, because it was not a calculative entry. It was an entry based off of emotion, right? Because there are points when the market is selling, of course. Look at here now. The market has started selling from here, and I think I was expecting that the market was going to keep selling. It was going to sink below the 50 EMA and the 200 EMA, which is did here, but then it reversed, right? To take markets, to take away part of the imbalance here. It didn't take the imbalance out fully, okay? And it didn't take away that imbalance because of the bearish engulfing candle we have here, okay? So, but it went up here, right? It took this and then it fell. This was 26.49. If you check your trading view, you will find out that there were a lot of places where 26.49 was serves as the liquidity point, right? So it came from here. Now, when you see this, and when you see this bullish engulfing candle, here, and you see this is it doji they used to call this? I don't remember the names of this thing. You see this, they can be almost sure if this happens at the liquidity point, your candle a bullish engulfing candle first, it hits your liquidity point, 26.49 in this case, and then you see this next candle, this candle that looks like Satan. Yeah, just know that okay, this brother, the next candle is going to come down. If, please note what I'm saying, if this rejection happens at a strong liquidity point, I want to believe you guys understand what I'm saying. If this happens at a strong liquidity point, when you see this candle, this next candle, let me sure. Oh my god. Where is it again? Sorry. Okay, this was it. I'm trying to make this big for you guys to see well. Where is it? Sorry. Where is it? I apologize, please. Forgive me. Okay, I think it's January. Yeah, this is it. January 6th. Alright, let me just bring it here. January 6th. Okay. So this is the candle I'm talking about. 26.49. The market hit it, and then we had a slight rejection on this bullish engulfing candle. Then you have this eligibility here, this small doji or whatever it's called. You can be sure that the next candle is going to be very bullish, or is going to start a bullish trend. Okay, and this was exactly what happened. I can't remember if there was a news here. I think there was a news on this particular day, and then it fell, and then now it first showed that it first acted like it was going to keep selling, right? With this bearish engulfing candle, if you see this candle, don't even enter yet. When you see it close, don't enter. Just wait. Now, 2613.8 was a strong liquidity zone. I've marked this also before on my trading view. I marked this also, but it did not enter, it did not sink into this, right? In fact, it rejected from there. This was immediately when this rejection happened. I knew that okay, this brother was going to start selling. It was going to start buying up rather, right? And it was, I think I asked us to close this trade. Then for those of us that were here, that are in this trade, then I asked us to close it around there. Okay, and we took a buy position the next morning, which we made profit from. Okay, so this is just showing you guys that it's not, of course, it's not every bearish engulfing candle or bullish engulfing candle on the 1 hour that you will trust, especially if it is close to your 50 EMA or 200 EMA. In this case, this was close, so you shouldn't trade this. In this case also, you can see we had the bearish engulfing candle. Engulfing means that a candle body swallows up the high and the low of at least 2 other candles when on a certain trend. You know, there's this buy trend now, right? And then this candle swallows up the low of the year, swallows up this low, right? When this candle fell, it swallowed up this low, but it was too low. It was too close to your 50 EMA. It was too close to your 50 EMA. So it's not reasonable for you to take a sell here now, even though you saw a bearish engulfing candle, because it might be that it is coming to retest a certain point here. It's retesting your 50 EMA to gain more power to go up, to rally up, and that was what was happening. The same thing happened here, a bearish engulfing candle, but it was to touch your 50 EMA, and then what? It started going up. Okay. Of course, this was a bearish engulfing. This was not. Yeah, it's a bearish engulfing candle. If you are lucky to see this, if you take sell position when you saw this, you take sell and you put your stop loss at the top here, at the top of this candle, and your TP on your 50 EMA, you'll have made how many profit? What will you have made now? Let me see. If you did at this close, so you'll have made 95 pips. 95 pips profit here. Okay. And how much would you have risked to make 95 pips? You just only have risked 37. Sorry, what was this? You only have risked 18 pips. Sorry, 49 pips. 200 pips. Okay. So this, you have made 104 pips while you are risking only. Okay, so that's 1:2. If you are able to snap this, to see this, I don't know if I'm making sense. Please, guys on mute, let me know if I'm making sense. If what I'm saying is making sense to you. Everybody, oh yeah, on mute. I want to hear from you guys. Do you understand? If you don't understand, maybe I can explain it and make it clearer. Talk, guys, please speak up.
I think I'm on par with what I've watched a video similar to this when you talked about EMAs on your YouTube channel. So I think it's in line with what you've shown us.
All right. Okay. Is there someone that doesn't understand what I'm saying? If this concept is strange to you, please speak up. Excuse me. Nobody is talking, okay? All right, so let's continue then. Okay. I also want to show you this very, because this thing, this has helped me a lot to make money, to be honest with you guys. It has helped me to make money. If anybody that has been with us for a long time, you will know that I think most of last year, from around August, I was targeting mostly gold sales. Anyway, that is like, although gold was buying most of last year, but I made a lot of money selling gold than buying gold last year. A lot more money selling gold, right? And it's because this was the first concept I understood about gold. That okay, that if I see a bearish engulfing candle after a major rally on gold, and if the rejection is happening around a strong liquidity point, or even if it's a minor liquidity point, I just know that okay, it's definitely going to be a sell. Like gold is going to sell temporarily, and I was going to position myself to okay. So this is another example of a successful sell trade, right? The first thing was of course 2664 on the trading view. When I've marked the liquidity points, 2664 region is a strong liquidity point. Also, there are a lot of rejections and a lot of resistance and support on it, a number of resistance and support on it. So this first indicator, actually I don't really buy the indicator sheet because anything can happen. Indicators, I said indicator, candlestick patterns rather. This candlestick showing here, it might be a decoy, but if you know that this is a reversal pattern, this is a resistance zone, right? And rejection is happening. For those who know, they can enter at 2664, but it will not be okay. Where are you going to put your somewhere above that liquidity zone? Okay, your stop loss should be somewhere above the liquidity zone, but that is for those who know the reversal places, right? But look at what happened here. We've had a buy. Let me see if I can reduce this. This is January 2. Okay, so this happened on January 2. So from December 30, you can see that gold was buying up, and so we have a buy trend coming for the past 2-3 days, and then it got to the resistance zone of 2664, right? That's a strong resistance zone, and you had this bearish engulfing candle. Now, if you look at the characteristics of all the red candles that were happening here, except for this one, which was touching your 50 EMA, which you shouldn't prioritize because of touching your 50 EMA. It could just be a decoy towards launch higher. Okay, you see that all the red candles here, none of it was closing below any of your green candles. There were no closes below. There were only the wicks. It was only wicking. It was not closing below. Now look at the first time we had a sell candle close below 3 candles before it. This candle, this was it. This was at 5 a.m. on Meta 5. There was this close. So remember what I said? A trend was coming. We had a trend running before. Now the trend hits a roadblock at the resistance level of 2664. I'm going to show you on TradingView before this class finishes where the liquidity point. I hope my system does not die before then. And then look at what happened. We first saw this reversal candle, and then this candle became a bearish engulfing candle. It swallowed up the remaining the low of this. The close of this, the open or the close of this, the open or close of this, the open and close of this. This candle swallowed everything up. It covered it. This is a strong indicator that's what we are going to sell. That's the second thing that confirms it. Remember your trend first, then your trend meets a liquidity point, that's a resistance zone here at 2664, and then you saw a bearish engulfing candle. Now, whenever I am unsure, I also use a fourth criteria to confirm a sell. Of course, this would mean that you have to be patient now, right? And that criteria is what? Is 2 candles close below my 5 EMA and 13 EMA. This is my 5 EMA, moving average 5, as you can see on the screen. That's the one marked the red wavy line, and the yellow wavy line, that's my 13 EMA. So I've seen a reversal pattern. I've seen a reversal, a resistance zone has been hit, a reversal pattern is being formed. Now there is 2 candle closes below my 5 and 13 EMA, which is this and then this. 2 bearish candle close. Let me emphasize that. 2 bearish, two consecutive bearish below this. In fact, I can just put my sell here, or of course I can wait for a little rejection to the that's to fill up any imbalance that might be. Okay, but if you put your sell here, if you place your sell here and put your stop loss here, where will be your TP? Your TP will be at the next. Your TP will be at it will be on your 50 EMA, right? Because most likely, actually, the market is still going to come down to your 200 EMA, but to be conservative, it will first hit your 50 EMA. So that was why I said I was hot when I missed this, when I left this trade, because it was unreasonable. I don't know if it was because it was the night, but when I saw this rejection candle, I just chickened out. I shouldn't have, right? So imagine seeing this was a roadblock, this was a liquidity point, right? To confirm an end of a trend, either temporarily or permanently. Of course, temporarily, most likely, an end of a trend. Then I had my engulfing candle sink below. I have already had a very good setup. Just enter your sell here, your stop loss here, and then your TP will be what? It will be 50 MA. It's not going to be static, because as the candle moves, right? As the candle is moving, it will also be changing. It will be changing. It will be going up or down, depending on the volatility of the market. Okay. So, but it's not bad if you target your if you target the next liquidity point, which the next liquidity point here was around 2702, 2703, thereabouts, this point. If you check your trading view, you will see your liquidity points. So I'm going to mark those things out now. So if you just target it here, there's no way. Of course, it will take some time, but the market will eventually come down. Now, yes, okay, to come down and sell. Now, I'm very sure that what is happening currently is that the market is going to, of course, to tighten up some imbalances here, to cover up this imbalance at around 2708 or 2709, and then it will fall further to meet your 200. I'm very certain of that. Now the 200 EMA, this position, this currently is at 2681.15. It might not be here that it will move, because due to the market's movement and volatility, it might move up to, let's say, this region. This is 2689, like I said, this low, the low of this particular candle. Is what I'm talking about. So we could see that we could find out that our 200 EMA, which is this white wavy line, might move up to this point, right? It might move to this point, of course, because due to the market's movement, and of course it will a certain liquidity point. So my battery is about to die, and I don't want that to happen. I just quickly want to let me quickly change this to share the screen of my trading view. Okay, trading view. So okay, I've actually marked it down. This, like I said, these are going to be our TP. So immediately the market opens, I will just ask you guys, put your stop, what's it called? remind me of what it's called. Your sell limit at 27.008 or 27.09. Put your stop loss at 27.18, just above these highs that we have here. 27, you can be at 27.18, and your TP at 26.90 to be conservative, not 26.88 or 26.89, 26.90. So I'm pretty much moving that direction. So of course, anything can happen in the market. You know, tomorrow is Trump's inauguration, and I thought there was going to be a bank holiday, but there's not going to be bank holiday. So I expect the market to come down for gold. Maybe USD might rise. It might go up further tomorrow. Who knows? Okay, so this is the next liquidity points. So by liquidity points are places. I believe everybody should know liquidity points now. Almost everybody should know it. They are the hotspots of your market. Okay, so these points now, these are liquidity points. These that's where you have a lot of meetings in the market, a lot of places where you are seeing rejection and reversals, right? Those are the liquidity points. Okay, this place one is also this 27.11. So these are minor liquidity points anyway. Okay, and then probably gold is still going to come as low as this place, 26.78. Okay, it could come as low as that. Let me check my. So actually, if gold is going to fall, I believe we could see gold still fall further to like 26.64 before it rises again. Okay, but just to be conservative, I think, of course, before it can fall to 26.64, it depends on how strong the news is. That's if it can happen tomorrow or next, or the day after tomorrow. That's on Tuesday. That would be that would be based on the market's strength and the market volatility. Okay, so you could see gold fall as low as 26, which place again, 26.64. So this is what I was talking about. That 26.64 is a strong liquidity zones. Look at it. There was rejection here, rejection here, rejection here, reversal here. It was selling and it's bounced back here. Okay, it's formed a circle around. It formed a turning around there and it's reversed. There was another reversal from here, right? So that's what makes a plate. That's what makes a certain point in the market a liquidity zone, a strong liquidity zone. Okay, so thank you very much for your time. I hope I've been able to convince you and not to confuse you that rice is sweeter than beans. Please, if you have any questions, kindly drop it. You're welcome. If you have any questions, kindly send it to drop it on the group page or on this Telegram channel. Have a wonderful time.